You're watching the Blockchain Interviews, hosted by Dan Weiskopf. Each episode features interviews with leading industry experts so that viewers can have a deeper understanding of today's quickly evolving blockchain marketplace.
Efi, we're about to get started.
Very excited, Dan.
Let's start by pronouncing each other's last name as you were suggesting.
Okay, a challenge, therefore, right? Okay, ladies first, right?
Sure.
Okay, so here we are today with Professor Dan Weiskopf.
Thank you.
How did I do with that one?
I like that. That was great.
Yeah.
And
With a Twitter handle, ETF Professor, by the way.
Exactly. Well, thank you for the plug. And here I am with Efi Pylarinou. Did I get that right? I don't think so.
98%.
Okay. Well, you pronounce it so everybody knows.
Efi Pylarinou.
And the funny thing about this is for me a little bit of an example of how social media can bridge so many different gaps. You know, we met on LinkedIn, we chat a little bit on Twitter, and here we've become friends.
Exactly.
You know?
Exactly.
I think that's pretty neat. You know,
and of course, you know, the link was there because of the ETF world, because of your leadership in the ETF think tank space.
Yeah. Now, tell us a little bit about your business too.
Well,
you're so networked.
Yes. As you know, I come from the traditional world of Wall Street, of structured products, hedge fund industry, when all that was innovative and was growing. And the last 7 years, I've developed domain expertise in fintech, covering innovations globally, especially in capital markets, wealth and asset management. And in terms of my business, as I've become what's called the B2B influencer, that I prefer to call a thought leader, I work with companies and I create content for them or with them that is around thought leadership, and I amplify it in my network. So to make it more tangible, I might be interviewing a thought leader within a company and discussing experiences and insights. I might be writing a blog around research, around insights of the company, and in general, creating content that is useful for my audience. So that's how I monetize. And, you know, being in Switzerland, I've developed a lot of expertise in the blockchain for finance space. Also because it became clear to me around 2016 that this was going to be a big disruptor, first in capital markets, then in asset and wealth management. And I guess I've been wrong about the order, but you know, it's good to be wrong. You have to be wrong in these spaces, but you have to dare to think and also follow, you know, what's going on, because it takes a life of its own, and we'll have opportunity to discuss this a lot.
Yeah, absolutely. Now, how did you, by the way, I think you've got almost 200,000 followers on LinkedIn. How did you achieve that?
Well, I achieved it by consistently writing. I started writing one blog on innovations every week since the March 2015. So that was early days. So, you know, the platform and fintech was not what it is, you know, this year or last year. So that's how I built early on the following. And since then, of course, I've increased a lot the content. I also, as I said, do video. I also create visuals and so on. And now it's on a daily basis. So it's really with that discipline and love.
Interesting. And how many people work at your firm? Is it you as a consultant, you do it all?
I am a sole person, a sole entrepreneur.
Okay. So let's jump right in. Usually, and by the way, to that point, we call this the blockchain interview series with CEOs, and well, you're a CEO, right? Let's talk a little bit about openness as a discussion. What does that mean to you in terms of the blockchain and the evolution of DeFi and Fintech?
I mean, blockchain for finance is all about different rails. It's all about open source rails, building on open source and building decentralized apps, what's called dApps in the blockchain world. So it's completely different than how financial products have been manufactured up to now. We all know they're manufactured on what I would call fenced or proprietary basis. So that's a big difference. However, if I look at some examples of big fintechs that are successful and very innovative, like, for example, Square or Alibaba, if you look at their mission statement, it's all about enabling everyone to participate and thrive in the economy or to do business. So there's an important element of openness from those companies. And then if you look at the big protocols like Ethereum or Polkadot on the other side of the spectrum, clearly there the mission is to enable creators to build dApps and to connect and interconnect those dApps to create value. So openness is where we're going. And I mean, some incumbents, I think, understand that. I don't know if it's JP Morgan that understands it or who of them understands it, but it's openness, the direction that we are going. And I think that the companies that are going to be successful are the fintechs like Square or Alibaba. And the choice of names is only for example, if they converge with the open source part. And we're seeing some early elements of that, aren't we?
Yeah, when I think about some of what you've just spoken about, I'm often reminded about, do you remember the movie You've Got Mail?
Yeah.
I'm running on this theme for a bit because I talk to a lot of advisors and individuals, and they're like, why do I need this blockchain? Why do I need to be invested in all this stuff? And the answer is, going back to '98, when that movie came out, the culture was about to change, right? And industries were about to change. And to your point, those companies that don't embrace this change, well, they may be left on the sidelines and run over. And that's part of my view of the blockchain.
100%. I think also, Dan, I'm a big user of the example of Amazon and their early manifesto around 2002 that Bezos put out, this API manifesto, and said to the company, and I'm consolidating it, condensing it rather, he basically said that the company has to run internally on APIs. Mm-hmm. That's 100% how everything has to communicate internally, but he ordered them that all these APIs should be externizable. And then he said in the end, and if you don't obey, you will get fired. So, that's a form of openness on which he created this complex ecosystem that's called Amazon today, right? And I think that now we're at a stage where these protocols can create sort of the next generation of complex ecosystems with openness in different kinds of connectors. But I mean, it's oracles and APIs essentially, but we're talking about this type of, how can I say, this type of procedure at a scale, because Amazon in itself, of course, is a closed system, right? But that is how I see things.
Well, I think you're spot on. And what he was addressing was, we're going to build a business model that is automated and of massive scale that will bring about a consumer experience that is evolutionary or maybe even revolutionary. And if you as an employee don't get on board, sorry, it's just not going to work for you, right?
Yeah.
And today, I think that's where we're headed to with this blockchain. And people, I think, often spend too much time thinking about the price action and not enough about the evolution.
Correct. I think that we should talk about the evolution. Of course, we can talk about prices or, the cryptocurrencies as an asset class today. But it's much more interesting to talk first about this technology and this philosophy, if you want, because decentralization is philosophy. It's a governance, a different governance mechanism than what we have today as a standard, right? And we're already seeing some elements of pushing that frontier with the Wyoming again, classifying and recognizing a DAO, decentralized autonomous organization, as a special case of an LLC. I feel that is a fantastic example, because also Wyoming was the first state that recognized legally the LLC. And I don't know how many people know that the remaining states, it took them about 10 years to follow suit, right? It's not going to happen now, 10 years, but just to give people the perspective, because now we live in a world where we think that it was always like that, right? LLC is the standard. So the big disruption of this technology, this governance, and the automation of processes is what is going to power the next generation of the web, what we call the future of the internet and Web 3.
To that point, Efi, let's talk about different industries, right? Which usually I wait till the last part of the interview, but I think it's good time to do it right now. Which are the industries that you see that will be most effective besides, the financial services industry? Because that's too obvious.
Yeah. Well, it's too obvious, but let's not forget that the finance industry is not native to the internet, to the web as we know it today, right? So for me, the industries that were native to the web, like social media, like advertising as we know it today, and affiliate marketing and e-commerce, all those are native to the web, and those are going to be completely disrupted. The processes are going to be completely different than we know them today. And then, there's going to be a lot more shall I call it convergence or overlap between industries that doesn't exist today. And a great example for me is health and fintech, right? Today, I mean, how are they linked? Not so much. Okay, you think of their link payments, right? You pay for whatever, but blockchain will link them because we will have, these are two regulated industries with very common data security and trust issues, and also with important customer experience journeys to be created, because those two are core to people. You know, your finances and your health, those are very important from an emotional perspective, and therefore they're better to create excellent customer journeys. And today we don't have them at the convergence. So I think there's a lot that will happen with blockchain.
So here in the States, when I think about healthcare, I'm thinking about hospitals and I'm thinking about insurance and the convergence of, you go into a hospital, if that information could be all on the blockchain and shared across insurance companies, you know, that would lead to lower costs and a better client experience. But that's here in the US. I don't know that that's the same in other countries.
Yes, but you're thinking now how existing healthcare systems are going to be modified or changed. I think that you're still thinking of the centralized ways that all these are operating.
Yes.
Whether they're managing the data, the finances, and the customer experiences, which are not even managed. I would say that they're non-existent. So, I mean, of course, we're going to go to the hospital when needed, and of course, we're going to pay. But how that happens, the journey in the digital world with our data, with preventative medicine and so on, is going to be very, very different. And, you know, of course, this will vary by country, but that's the case. The adoption and the penetration is also very different with, you know, DeFi or central bank digital currencies, or, you know, gaming or e-commerce and so on, because that's how it will happen. It will take time until everybody comes at the same to the same level.
Well, different countries will see different benefits and different changes. And I think one of the questions that we wanted to discuss is which countries are more welcoming and supportive of crypto and blockchain?
Well, again, there, Dan, I see that it depends on what the interest is. And I'll give you an example here in Switzerland. And Switzerland is a country whose political system is closer to a decentralized system than any other Western democracy. And here I see that they're very open to the idea, or more open to the idea of decentralized identity. We have here in Switzerland one canton that has operational decentralized identity through the blockchain. You know, so that's you know, you see that aspect. I think from a country perspective, it's only the countries that have that culture and that are small that will advance. I see it very difficult for big countries to advance decentralization because, you know, giving over power and centralization is very difficult. So, you know, you look at the US is more comfortable to entrust to Apple digitizing the driver's license as an identity rather than getting together and figuring out a decentralized solution. And when I say getting together, I mean the private and the public sector to figure out a solution. So I see it in small countries that are developed, that this will happen from the top down, so to speak. And then, you know, in other emerging markets, we will see those bottom up, if you want. And I think, you know, in the Philippines, for example, we have initiatives that use blockchain around credit scoring and lending and creating trust peer-to-peer. But this doesn't come, you know, from the government. So it's going to take a while before we are able to do this. And it's very much connected with how the developments unfold in terms of replacing what we have today as the internet and going towards Web3.
Yeah, but you were talking about small versus large, and then you see certain countries will benefit more from the store of value, as an example. In El Salvador, you know, it comes to mind, obviously, where there's massive risk of inflation, Nigeria, right? They can see, you know, real benefit when they align themselves properly. Here in the US, I think we take a lot for granted that otherwise wouldn't be the same in other countries.
Yes, but it is true that, you know, in emerging markets, there's so many more needs and frictions. And if you look, I mean, you mentioned Nigeria, you look at Africa, you know, when I was at Money 2020 last month, I heard the CEO of Rapid saying that in Africa, there's 2,000 different payment rails. And we all know how advanced they are with mobile money and so on. But from the 2,000 payment rails, Dan, only 3% talk to each other. Can you imagine that?
How can 2,000 survive?
I don't know. I don't know how they survive, but that's the fact. And then what he was saying is that the people there, they have come up with a great use case of Bitcoin because they use it as a layer 2 for payments because they can't do imports and exports with their currencies and so on. So, you know, again, here we have open source, frictionless, that is being used innovatively by the people. We don't have these needs in the developed world. But if you want to import or buy something, you know, you're in Nigeria and you want to buy something from the US, you need US dollars. And, you know, the countries that lack liquidity of US dollars, that's where people are going to take Bitcoin and trade, because Bitcoin is liquid. And by the way, now on top of it, it's in demand. They'll even make money, not pay fees, if they trade with Bitcoin. So it's just amazing because, you know, the narrative of store of value of Bitcoin is not only a narrative nowadays, it's true. I mean, I think even JP Morgan says to clients, look at allocating a bit, a hedge for inflation, some real estate, some gold, and some Bitcoin.
I think at this point, it can't be ignored.
Right,
You know,
it can't be ignored, right? you know, that narrative is true, but the irony, the important thing is that this inflation hedge is liquid, much more liquid, of course, than real estate and gold.
Yes. Yes,
So,
unless of course, real estate and gold are on the chain.
yes, but they're not. We haven't
yet.
tokenized them, right?
Not yet.
Not yet. And even then, we will need to develop another infrastructure for those secondary markets. Because let's call it by its name. I mean, if you tokenize real estate today, you know, you in countries where there's issues of titles and transferability and so on, you've done something very important, but not in the developed world. You need to create that secondary market.
Yep.
and make it work. But let's go back to Bitcoin.
So you know, a question I'm always asking people on these interviews is, you know, in retrospect, 10 years from now, what are people gonna look back at and say, oh, that was so obvious, you know, what was happening? What were people missing about the change in the evolution? I mean, what do you think people aren't paying attention to today that 10 years from now, they're gonna go, aha, I should have thought of that?
You know, I think that people don't understand what is the picks and shovels of this gold rush. So they're missing this. They don't understand the potential that we have a technology that is not only cross-industry, but bottom-up. And that's not the case with the other disruptive technologies, you know, IoT, artificial intelligence. This is bottom-up. And there is a unique opportunity to participate early in this innovation cycle. And you can't do it for the other fourth industrial revolution technologies. Here you have the opportunity to do that in several ways. And I tell people, you know, that don't understand it, and I understand, right? And it's not user-friendly and so on. But the only way is to open a wallet. Just open a wallet and experience it, right? And ironically, you know, even if Facebook is never allowed to launch DM, and the Novi wallet that is piloted now with Paxos stablecoin, I mean, I think that it's actually, there's a great possibility that it might end up just being allowed to use regulated stablecoins backed by the US dollar. But even in that case, we are talking about people, more people through Facebook, having a wallet where they can own the asset and the implications of that. They own that IP. That is a huge mind shift. We're in a cultural mind shift era.
Yeah, and I think it's led by, for lack of a better description, the younger generation demanding it, right? And you know, $1 and a dream, right? So anybody can open a wallet and experiment.
Dan, what you say is very interesting. You know, I was last week at the Fund Forum conference in Monaco. This is a classic investment conference that's been going on forever, 3 days. They talk about, ETFs, the better investment themes. Of course, they were talking this year about sustainability, emerging markets, and so on. I was attending one panel where they were talking about new customer acquisition. And one of the panelists that is actually in the business from the UK running some pension fintech, she was saying that it is clear that the new generation, their first investment is not a stock, is not an ETF. What is it? Call it by its name. It's crypto.
It's crypto.
Okay. So that tells you that is a very strong, observation.
Yeah. And they're the ones who are going to be inheriting all the trillions, right?
Exactly.
And in the ETF space, we always say, it's all about transparency. It's all about lower costs, all about tax efficiency. Once you develop these and enjoy these characterizations, these factors, you don't go backwards, right? It may be that some of the younger generation at some point buy stocks on the chain, but that's going to be their medium to do it. And that's part of the reason why we launched, the fund that we're involved with, as an ETF specialist. We saw what this might be the future. This goes back obviously a number of years, and it's coming about.
Exactly. And we are at the beginning in terms of experimentation of use cases. Capital markets for sure will change, fund settlement. The wrappers essentially that we know today are going to evolve because they are archaic, and the way to replace them is to have these smart contracts essentially create these if you want portfolio or allocations, customized indices, direct indexing, which are the trends that are happening in front of us right now, but they are built on the old infrastructure, and then on the blockchain this will be the way to go. And the other very important item that is not discussed enough is that once you put these assets, whatever they are, a stock or whatever it is, right, you put it on chain, then you have all these on-chain analytics at your disposal that is a dream world and doesn't exist in the current asset management. This is not about quant strategies. It's about real on-chain analytics that they just don't exist today. Right?
Yeah.
I mean, take a company share today, you have to wait for the quarterly results to see, what happened with their orders, with their inventory, and on and on. That is going to change. It's going to be nearly real time.
Very quickly. I would also say I did a great interview with Mike Cagney at Figure. And 3,000 people now work at that company, yeah. And liquidity in their lending business, right, is real time, yes. Right? They're home lending. I mean, how about this one? This was, should it take 45 days to get a HELIC? Not necessarily. How about 5 minutes?
Yes, yeah. For me, Figure Technologies is such an amazing example of what can happen and on what is considered a pretty complex financial instrument, right? We're not just talking about payments or purchasing a share or selling a share. We're talking about mortgages. Yeah.
Yeah, trillions.
Yes. Yes. Yeah. It's
So we're coming up towards the end of the hour. Is there anything else you want to touch on, or?
I want to touch. We cannot not touch the topic of the Bitcoin EDF Pro shares, and you know, the unique symbolic also issuance or listing rather. I don't know if you want to share anything from this launch that will, you know, it's marked something new. I have to share what I was checking with Eric Balhunas, right? I pronounce his name correctly because he's on top of the figures and the numbers and looking at how many assets have been raised. I don't know, we are over $1 billion. I'm not sure exactly the figure. And of course, they have asked the SEC to allow them to not be subject to the limit of the SME Bitcoin futures. But what was interesting today, I was looking at some statistics that Glassnode shared about the collateral behind the Bitcoin futures, because you know, you have to put up margin. And what is that margin? In some cases, you can put up crypto, and in some cases, you can put up stable coins. Mm-hmm. And apparently, Glassnode is reporting that the percentage of stable coins that are posted as collateral has doubled over the past 6 months. So the users of the futures are using more stable coins as collateral rather than crypto. But this is also, I mentioned this because I'm not sure that people understand this ETF and its nuances and the risks.
Yeah, no, our CIO, Mike Venuto, just finished writing something up about it that'll be going out later this week. And there are warnings about it. And I think he's referring to it in a fond way as Frankenstein, meaning that people need to be careful. There's going to be tracking error. Don't look at it as an ETF so much as look at it as something similar to an ETF. You know, it's a 40 Act fund. The tax consequences won't necessarily be the same as what we're used to, right? Now, having said that, you know, from a trading standpoint, it's real easy. And if you know how to trade, you know, if you know how to trade fast and furious, maybe it'll work for you. If you, or, you know, if your goal is to simply be long Bitcoin, not sure why you do it.
Yeah, exactly.
You know.
Yeah.
Oh, and by the way, here's the other tidbit. You know, the advice we're giving, because, you know, in the ETF think tank, we work with financial advisors on allocations and how to build portfolios, et cetera. And you know, they're getting a lot of inbound inquiries about how to get exposure, but they got to get educated on exactly how it all works. And, you know, they also have to be prepared to update their ADVs when they take on this client exposure, this risk, and talk to their E&O insurance company too. You can't just cover your eyes and pray. You know, this is going to be a volatile ride.
Yes, but then I think, there's a lot of education that is needed to understand these digital assets that are open source and therefore volatile, because also they trade 24/7, because they trade it on regulated exchanges and indexes and you name it.
Yeah.
And as this market matures, I think it makes a lot of sense also to think of a portfolio allocation, part of the alternative investments or the innovative investments that one holds, and to even look at a core passive holding and some active strategies that work in this space, be it technical analysis, be it arbitrage between exchanges and other techniques. So this is no different than how advisors got educated about emerging markets in the very, very early days, 30 years ago. And I mean, it's not different, but it requires this education. And by the way, part of my business too is to focus on building these bridges and talking and advising either professional investors on how to look at this, not selling product, but really holding their hand and discussing what is going on, because the truth is there's so much happening so fast, and there's basic understandings that need to be there, be it operational risks and macro risks and all sorts of different risks that are very different than what they're used to. So, yeah.
So Efi, thank you very much. From New York to Switzerland.
Okay.
I enjoyed your insights, and keep up the blogging, keep up the tweeting, and for LinkedIn, I really find your insights of great value. So thanks very much.
Thank you very much, Dan, and all the best.